The monthly candle has officially closed above the major $32,000 horizontal resistance. In today's video, we're going to be discussing the implications of this, what it means to the future of Bitcoin's price action, and of course, the upcoming interest rate decision. Let's go ahead and jump into the video. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're going to be discussing the monthly candle close, what it means for Bitcoin, where Bitcoin is likely to go next, and of course the upcoming interest rate decision. Before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic news. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you're interested in, join us on Telegram. It is the third link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in our VIP group, we post trading signals with exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will you get access to all of our trading signals, you'll also get access to our group chats, our general chat, our trading chart and education chat, our news chat, our help chat, our trade setup chat, and our daily video chat. If you're interested in joining all of that, contact me in the pinned comment of the free channel for more information. Let's dive into the video. Before we do, guys, excuse my voice today. I'm actually feeling really sick, so bear with me in today's video. Moving over to the market data. Looking at 24-hour volume, we are up 4.01%, and that is $72 billion of 24-hour volume. 24-hour liquidations are at a whopping 104 million, up 15.56% for the last 24 hours. Overall volatility on the 60 has been declining for the last 3 days, and on the 30, we are still seeing the volatility index kind of around plateau, but very slightly decline as the price pushes upwards. This could potentially be seen as exhaustion, compression, again, a little bit of consolidation before the next move. We're likely to see quite an explosive move pretty soon on Bitcoin, so we are definitely preparing for that. We're discussing that in our short-term analysis today. Moving over to the liquidations, we can see of the 105 million, a massive 66 billion came from long positions and 38 million came from those short positions. Moving over to the price action, we can see the price action in the last 24 hours has actually been very choppy. All right, we saw the range high retested, we saw deviation above, we corrected all the way down to the POC, not once, not twice, but 3 times before pushing back up to the range high. So in the last 24 hours, Bitcoin really hasn't done anything significant. It is essentially just pushed sideways. And with that sideways push, we have seen again 105 million in liquidations, which tells us right now, people are absolutely stacking leveraged positions within this range. And this entire range is one big leverage trap. And we are going to see an explosive move either through this range or below this range very soon. In the next couple of days, I would assume, or next week, I would assume. Okay, so what does this mean? It means be very cautious with your leverage, okay? And not just your leverage, be very cautious with your position size, because that's what does matter. And if you are taking your positions, be smart. Don't be stupid. Be smart. Take your positions at areas of support or resistance. Do not take a short midway through. Wait for the price to come up into these range highs for shorts. Wait for the price to come down into these range lows for longs. If you're looking for shorts, again, you're looking for shorts from range highs. You're looking for longs from range lows. You're trading your support and resistance zones. Do not jump into the emotional roller coaster. Do not jump into the chop just for the sake of it. Let the chop pass, let clarity move into the market, and then make your decisions based on supports and resistances. Okay, guys, moving over here, let's jump into the DXY. The DXY is green. The DXY is looking relatively good. However, all of that could change if interest rate decisions come out and mess up the market. So we'll discuss that in a second. But the DXY is still looking bullish. It does look like it wants to come up to 108, potentially 108.5, okay? The DXY will relatively remain bullish provided this 50 EMA does hold a support, the 50 EMA a red line. If we break below the 50, and that is when I would say we are looking bearish and we can expect a continuation lower, expected 104.5 to 103.5. Until then, uptrend does resume for DXY. Again, what I just said could potentially be flipped on its head within a matter of moments when the interest rate decision come out, so we do have to be mindful for that. Taking a look at those interest rate decisions, we can see the interest rate decision is expected in 17.5 hours. We have a 96.7% chance, okay, of no change. No change from last. Interest rates will remain at their current rate, which is 525 to 550. And we have a 3.3% chance of an ease with a 0% chance of a hike. Now, I'm going to go ahead and say this. On the random off chance we get a hike, and I think it's 0% chance, but on the random off chance we get a hike, that would be absolutely catastrophic for the market. We will see a massive correction, okay? If we get an ease, that is going to be very, very bullish for the market. We should see a large rally. But the no change is more or less going to be a non-event, meaning we're going to see a lot of volatility. We're going to see the price spike up and spike down and spike up. But we're likely to see no real new directional movement develop from that decision, okay? It is more or less just going to be a trap to flush out positions, reset the market moving forward into the next 4 weeks. So be mindful of that, watch out for it, but don't make any decisions based or centered around it. A big one is going to be the speech that happens after, but I still expect a lot of vagueness, no clarity, and really the same thing has been saying for the last 6 months, which is we want to bring inflation down, we're working towards inflation coming down, but we're doing nothing, we're not going to tell you what we're doing. And I expect basically the same answer this month. I don't expect any change from that. Moving over to the broader markets, the S&P 500 is still looking relatively weak. I'm not going to say it's looking bearish right here because we are at support. I did say we're looking bearish over here as we expected a correction, but now that we are at support, support is important to us not, and we could see a bounce from here. However, if we do not, we then expect the price to correct massively toward the downside. This is kind of our final stand moment. If we break above this downtrending diagonal trend line, that is when the S&P is likely to move back upwards. Watch out for that. The Dow Jones is in exactly the same position with a major horizontal support just below us and an overall downtrending trend line acting as a bullish trigger. The price is able to break above here. I expect the price to move upwards. While we remain in this level, we are at support. If we drop below it, we expect the price to correct quite aggressively. Let's go ahead and jump into Bitcoin. And again, I wanted to briefly interrupt today's video to discuss the 2 exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. We have 2 things to discuss today. Number 1, the 4-year cycle, the bull run, the monthly candle close, and the high time frame charts. And number 2, the short-term price action right over here. What can you expect to happen today? What we expect to happen today, and what the charts are telling us are going to happen. So let's dive in, starting on the macro. So first and foremost, we need to define what we are looking at. And a lot of people on this channel already know, but there are new viewers every single day. 40% of our audience are pretty much new every day. So let's go ahead and talk about what we are seeing. What we are seeing are 2 things. Number 1, we are seeing our date range trend, which is represented by this, horizontal, colorful bars. This is kind of our 4-year cycle, right? We have a bear market phase, our consolidation phase, and our bull run phase. Our bear market, consolidation, bull run, repeat, repeat, repeat. And then number 2, we would have our structural levels, our horizontal bases, and our dotted trend lines. These are our structural levels of significance on the monthly chart. These don't reflect random levels. If we take a look, these reflect the base of support in the bear market, the base of support in the bear market, the base of support in the bear market, and the dotted trend line represents the dead cap bounce high once the bear market already started. So that first dead cat bounce in the initial bear market, okay? Those are the structural levels. Now, Bitcoin has officially closed a monthly candle above our first major structural level, which is going to be that 32K level, which is the horizontal level. The horizontal level is marked out by, again, the base of support of the prior bear run cycle. Every single time we have seen a monthly candle close above this level, we eventually see a continuation toward the dotted trend line prior to, and this is the important part, prior to closing a monthly candle back below it. So it doesn't mean we can't come back under 32K this month. It doesn't mean we can't come back to 30K this month or retest it. Again, I don't think that's going to happen, but we'll talk about it in today's video. But what is it saying? It's saying we are unlikely to see a monthly close underneath it. Again, we are more likely to see a rally to 48 prior to closing under 32K. That is what this is suggesting based on, and this is the most important part, based on historical price action data. This is not what I believe is going to happen. Honestly, I don't really care what happens with Bitcoin. I'm a trader, not an investor. But based on historical patterns, this is the pattern we have seen play out. We are unlikely to see a monthly candle close under 32K prior to reaching 48K, now that we have closed a monthly candle above 32K, because we have not seen this happen in the past. So, does that mean we are in a bull market? The answer is simply no. We are not in a bull run yet. Okay, we are not in a bull run. We are in an aggressive uptrend. We are in a weekly uptrend. We are now actually in a monthly uptrend. We've been in an uptrend for a very long time. We've actually been in an uptrend ever since we crossed at around $20,000 back in January 2023. If you've been following our channel, you would know we were bullish at 16.5K to 18,000. We have been in an uptrend for a very long time. As we said on the channel months and months ago, we could expect a 200% plus rally on Bitcoin before we even enter a bull run. A bull run is very specific. It's not a bull market. Aggressive uptrend and a bull run are two very, very different things. A bull run is likely to start when two things happen. Well, three things happen. Number one, based on the 4-year cycle, we are likely to enter a bull market when the price crosses the 1st of April 2024. That is likely when we enter this bull run phase. Number two, if we look at historical data, we can see when we close a monthly candle right over here, again, right over here, above that dotted trend line, which is 48K, that is when the trend angle, the angle of the price action, okay, significantly increases prior to prior price action. If we take a look at the trend angle over here, we have a, 40% gradient moving into a 73% gradient. If we take a look at the trend angle over here, we have a 43% gradient moving into a 65% gradient. That increase in trend angle represents a shift in strength, momentum, volatility, velocity, volume, everything you can imagine that will push the price up. That is what that reflects, okay? It reflects an extended period of time of massively increased demand, which again tells us we are in a bull run. So number two and number three, we need to see a monthly candle close above the Ichimoku cloud baseline. The Ichimoku cloud baseline is this blue line. You can see a monthly candle close happened over here. A monthly candle close happened over here. Guess what? We entered a bear market when we lost that monthly candle close. So you can see while we remain above this Ichimoku cloud baseline, we remained in an overall uptrend. We lost that level, we moved into our overall downtrend. We went above that level, we remained in an overall uptrend. We lost that level, we went into our overall downtrend. Therefore, when we expect the price to enter that new bull market, we are looking for a monthly candle close above that level again. So those are the 2 or 3 things we are looking at for the high time frame price action. Let's go ahead and jump into the daily chart. What is happening over here? What are the range telling us? So straight away, if we zoom out, we can see some very key levels. I'm going to go ahead and actually draw in our more significant levels up over here as well. Okay. Sorry, you got to excuse my throat's not feeling the best today, guys. This is our current structural range of price action. It's kind of the scope of price action we've been in. As you can see, the VRPV is suggesting, we have all this volume. been stacking up in this range for the last, 8-9 days now. So a lot of orders, a lot of volume, a lot of buying and selling has happened within this tight range. And this range is around, I think it's around 2 or 3%. Let's go ahead and double check. This range is around, 4% in height. So a pretty large range, 4% range happening over 8 days. It is a large range, there's no doubt about that. With these large ranges, we do generally see large moves. So straight away, we have that measured move. If we take the measured move and apply it to our 2 points, apply it to our break up, we can see it takes us over 36, apply it to our breakdown, you can see it takes us back to 32. So according to our current horizontal range, we have a break up target above 36, and we have a breakdown target of 32. According to the VRPV, we can see the VRPV starts to significantly drop off above 34.8, okay, and starts to drop off below 33.4. So we do know 34.8 and 33.4 are going to be our respective trigger points, meaning we have a bullish trigger over here, and we have a bearish trigger over here. Meaning, if we drop below this level, we can expect bearish velocity and bearish momentum, okay, to pick up, and the price will aggressively correct. If we break above this level, we can expect the opposite to happen. We can expect strength to come to the market and the market to push up quite aggressively, filling this gap in the VRPV on the bottom or top side. So, what does that mean? It means we have an overall high time frame level of resistance and a high time frame level of support. If we clear this level of resistance, we continue upwards. If we clear this level of support, we continue downwards. Keep it simple. It really isn't more complicated than that. Let's go ahead and break it down into an even smaller time frame, guys, down to a 15-minute chart. What are we seeing for Bitcoin right now? So again, we have a nice, strong uptrend developing on Bitcoin. This is going to be our overall uptrend represented by this diagonal trend line. You can see we've been retested. We have a short-term rising channel formation over here on Bitcoin. This rising channel formation is moving into our level of resistance, and therefore we do have a potential to correct back down to our base of support before the end of the day, which is going to be, again, the end of the day, we're seeing that interest rate decision. So if we go back to that higher time frame chart, so on the 4 hour, what was it, hourly? Let's take a look again, sorry guys. On the hourly, we can see where does this level line up with? This is going to be our POC level. This is our POC level, meaning below POC, we have again a higher probability of coming down to support. Above POC, we have a higher probability of coming up to retest this level. So right now we are in the bullish segment of the horizontal range. This is going to be our bearish segment of the horizontal range. And therefore, although we are at resistance, there is a potential for a breakout incoming. So we do have to be aware of that. If we break upwards, we should see that breakout play upwards. Okay, now, however, if we break down from this current horizontal channel, this rising channel formation, we can expect a retracement back down to around 34,200, potentially 34, which is going to be this POC level. And if we lose this base of support at POC, we then expect a full-blown correction back down to 33.6. And if we retest 33.6, that then puts us at risk. Okay, puts us at risk of correcting lower. So watch the short-term price action play out, guys. Pay attention to what is happening. And again, make sure you're very much aware of your overall structural ranges. If we take a look at the higher time frame over here, we can see we do have, again, this cluster of price action. We have this overall uptrending formation represented by this trend line. Let's go ahead and actually draw it in correctly. This overall uptrending trend line, which we can see over here, we have our test number one. Our test number one, sorry, my pen isn't working. Test number one over here, test number two, test number three. This is going to be represented by the overall uptrend. If we go ahead and pop in that lower level of support, that lower level of support is actually down around this level. So 33,400, which is around this level. You can see, guys, if we do lose this uptrend again, if we do lose that POC, we will have lost this short-term uptrend, and that is likely to not only put us into a downtrend, but push the prices lower. So definitely watch out for that one, guys. If we can look at momentum, momentum is an overall downtrend. If we do break out of this downtrend on the RSI, we could potentially see momentum flip upwards and the price push higher. So again, a lot of mixed signals over here, and it generally is the case when we are in these horizontal ranges. You can go into it and look into it for hours and hours and really try to think about what is happening. The reality is resistance until it is not, and only when we get above that resistance does it become clear that we are moving upwards, and only when we get below this level of support does it become clear that we are going to move downwards. Until then, you have to get into that smaller time frame price action, break it down, and really take a look at what is happening. So right now, like we said, a rising channel formation. If we break it down from the rising channel formation, expect that pullback. If we see that pullback occur, then we are retesting a POC. Then we are thinking, okay, support is support until it's not. If that support is lost, then we are looking for lower. So you're doing layer by layer, or should I say step by step or level by level trading at the current point in time, okay? Thank you for watching, guys. I'm going to have to end the video there, guys. I'm really not feeling too well, and I'll catch you guys in the next one tomorrow. Hope you have a fantastic day. And again, guys, manage your risk. Be cautious. Don't overtrade into these interest rate decisions. They're very, very volatile. They're very sporadic. You know, one moment the price can look good, the next moment it can go to hell really quickly. So pay attention, be cautious, and most importantly, do not get into your head about it. Do not use your emotions. Stay objective and stay real. Thanks for watching. See you guys tomorrow. Cheers.